Welcome to the Half Empty, Half Full Consumer Advocacy Radio Show. Listen in nationwide on the Tan Talk and Starcom radio networks with your host, Lori Zook, the consumer champion. Each week, we'll be discussing problems and solutions, changing negatives to positives, and helping you, the consumer, to learn something new. Get smarter faster and avoid scams and fraud. All opinions are that of the host and guests, and all shows are for educational purposes only and not to be construed as legal advice. Here's your host, Lori Zook.
My guests today are Sheila Desautels of Top Notch Associates and Katrina Madewell of Charles Rutenberg. Now, Katrina is also the host of the Tampa Home Talk show here on the Tan Talk Network. We're going to be talking about what you as a consumer need to know about purchasing a home. Now, if you ask me why did I pick that as a topic, I have purchased homes in the past, but maybe for someone who hasn't purchased a home, it can be kind of intimidating. You know, you don't really know the process and how it works. So that's why we're going to do the show today. So, Katrina, tell me a bit about yourself.
I think it's a great topic, Lori. And thank you for having me as your guest.
Very welcome.
So I come from the mortgage world, actually. I started when I was 18 years old, so I have 22 years in the industry. And so I guess what makes me a little bit different is, you know, being able to dive into that mortgage side if I need to, and understanding all the ins and the outs of DU and LP and what all that means and how credit scoring works and all that stuff.
Very good. And Sheila?
Well, thank you for having me. I'm honored to be in your presence today and speaking to the audience. And yes, it is an excellent, timely topic. My experience comes from primarily moving. Being military brat, we moved a lot. We never spent more than 2 years in a home, and so I was introduced to the aspect from very young, and then became a realtor. Since I have so much experience in the actual physical moving, I figured, you know, I should really get some book knowledge on this, since I have a lifetime of experience already. And so that was,
a long time ago.
30 years ago, over
Wow.
30 years ago.
All right, great. Well, let's first talk about the definition of, and you can each give me your answer. Who is a first-time home buyer? Because we use the term, first-time home buyer, but really, who is a first-time home buyer?
You go first, Sheila.
That's a really great question. And I think the first-time home buyer was a term that was coined by governing entities who wanted to really monitor in the fresh people entering into the marketplace, because as you know, if you have a house to sell, well, you're stagnant. We need people entering the marketplace, and that's not necessarily someone who's entered the marketplace for the first time, but maybe somebody who's re-entering the marketplace. So this is how the government would monitor how fresh flow of investment into the real estate industry and keep it healthy.
So basically, it's the government marketing for people
Pretty much.
to go in and buy homes.
So that they can see that there is always a healthy flow coming into the marketplace that's keeping the real estate market moving, because it does employ a lot of people.
Okay.
First-time home buyer, in my opinion, would be either someone that's never owned a home before, or to tag on to what you said, Sheila, someone that has not owned a home in the last 3 years, which is something the government kind of put that into regulation in place. You have different down payment assistance programs that also tie into that. And so they're each going to have their own different rules and regulations. But theoretically speaking, a first-time home buyer would be someone that has never owned a home before or has not owned in the last 3 years.
All right, good. Now, here's the big decision. How do you determine if you're ready for home ownership, versus renting? And obviously the market has, gone upside down and switched around, and now things seem to be calming back down a little bit. So Katrina, I'll start with you this time. How do you know if a potential client comes to you and they're renting something? How do you determine if they're ready to really buy a home? Because, people will call up and they have no money and they want to buy a home. So how do you do that?
Well, first of all, we do an initial consultation with every single one of our clients. We're going to spend about an hour with them in advance to make sure that home ownership is a good match for them, that they're ready. We're going to check their credit. We're going to do a lot of stuff like that to make sure that they're ready. I mean, I had a client today that had a short sale about 3 years ago. When I looked at her credit, she's not ready. So I had to tell her, if your place is too small, you need to either rent another place for a year so we can get you on track, put together a plan so that you're ready, and go from there. But, there's some things that, like you said, are different than renting. If your pipe breaks, you can't just call the landlord. You are responsible for that because you're the homeowner.
Exactly. Now, what about things, I'll ask you, Sheila, what about things like, when you purchase a home, now you have to worry about taxes, insurance, HOA, CDD, and maybe you could explain the last two especially.
Well, I think that it's important to understand that you have to go by home purchase from when you're actually making the decision. The buying decision is macro to micro. And so you have to figure out location first. That's something you cannot change. The size, generally speaking, you cannot change that about the house, and the amenities would be the last thing. Now, as far as your budget is concerned, all those things at CDD, a community has to agree to a community development district, which is basically a way of a self-tax, self-governing entity amongst a neighborhood. So this would be something that you would gather along the way, information that you would gather along the way, either by doing your own research, maybe you have friends in the neighborhood, and again, your realtor would be a key resource.
If I'm moving into a certain subdivision per se, they might have a CDD, but that's something I'd want to know because that's being shared amongst all of the people living in that subdivision. Do I have that correct?
You do, and as a matter of fact, if that is not made available to you in writing, you don't have to close. You could actually walk away from the transaction if that was hidden from you and that was not readily available information. Most of the information is readily available, though, and so you would have to have a pretty good reason for, not going forward. It's pretty obvious.
I mean, we have an addendum, too, that
Right.
would be required if it's in a CDD community. And the flip side to that, just to tag on to this, we have seen, especially with the market changes, like you mentioned earlier, there's certain communities, especially townhomes and condos, that were heavily affected by this. If they get a bunch of people that don't pay their HOA fees, then the community doesn't have enough money to sustain itself. So to pay the regular everyday expenses that it takes to keep the pool clean, to pay the building exterior, whatever it is in a condo type community, where some of these CDD communities that were built in the peak of the market, they might have super low HOA fees or none. I mean, there's one in Meadow Point that has no HOA fees. Everything's built into the CDD. The advantage of that is the taxes are always going to get paid because you have investors that'll come in and pick up the tax bill. After 3 years, they can buy them for tax deeds. So your taxes are always going to get paid. So the flip side to that for CDD versus HOA, if HOAs don't get paid, they can tack on special assessments and charge the people that are paying so that the community can sustain itself. They can raise them high to where it might not have been in your budget if that's what you're paying. CDDs really aren't going to change. And sometimes they can go away. There's a lot of times a debt portion and a maintenance portion built into those CDDs. The debt portion, which is the infrastructure sometimes to put in the roads and stuff, can expire. All right, in places like Cheval, right? They have two. And so theirs are getting ready to go down. Some of them have been paid off.
Now, I'm sure, and you guys know I'm a northerner. I'm from New Jersey. Now, up there, when I had moved down here, we didn't have HOAs. We didn't have subdivisions and CDDs that I'm aware of anyway. We talk about HOAs.
But your taxes were higher.
Much, much, much higher. But explain to me, either one of you can do this, explain to me what an HOA is, and is there an HOA in every town, every subdivision?
No, it was a concept that was introduced because there are no state taxes. And so communities got together, Cheval was brought up, where there was a group of people who felt that they wanted more security for their neighborhood.
For certain standards.
Right. And they wanted not just any gate, they wanted a man gate. And therefore, in order to have man gate, then they have 3 man gates. And so now they've decided that they needed to pay someone to sit there at the gate and how much that cost. And they figured that was important to them.
Well, that neighborhood is built into their CDDs.
That is correct.
Even though there are HOA fees too.
But this was a concept of the community upon inception. And so the people that buy into that are buying into that concept.
Now, are the HOA CDD areas generally more affluent people? Do you know that is that what's making it more expensive in those subdivisions per se? No,
not necessarily.
No,
because we'll see lower ends that have HOAs around. Some of them have old deed restrictions where they're kind of lax. Some of them are new, right? And
yes.
So, like Sheila said, it's a standard of living, and you have to buy into that. If you don't want to live next to a bright pink or a bright yellow house, then, perhaps an HOA community is a good idea for you, because there's probably restrictions in the bylaws that prevent that.
All right, good. Well, let's talk next about the financial health. And we got a couple minutes. We got about 2 minutes before break. So now you guys both know I'm a credit consultant, and I get the people sent to me by the mortgage people that, they want to buy a house. But unfortunately, a lot of times, I don't know that all the mortgage people necessarily look at anything other than the scores. They might look at the reports. But the one thing they forget to ask the prospective client is, where are you financially? If you're coming in with really low scores and you need somebody to help you, well, yeah, that's going to cost you money. And then ultimately, you can't just go on, I don't think, into buying a house and having no money, because you're going to pay that mortgage payment. Now what happens if you lose your job? You're already in trouble from the get-go. So we're going to take a quick break. And when we come back, I want to start with that.
Do you need a private U.S. address for your home business? Do you need help packing and shipping? Are you tired of keeping your inventory at home? Do you need a storage space to store your merchandise? Helpship.com is a domestic and international shipping and packaging service company that can help you with your shipping needs. No matter where you live, we can forward anything to anywhere for you and your customers. Our services range from packing consolidation service, mail forwarding service, shopping assistant, and much more. We're rated A on Better Business Bureau. Expand your business to the globe with us. Please visit Helpship.com for more information.
Do you suffer from back, neck, or body pain? Do you suffer from migraines or have jaw or face pain? Has conventional medicine failed you? Were you injured or in an accident? Call chiropractic physician Dr. Dan Maddock at 813-935-1664. Dr. Dan has helped thousands of patients gain relief for more than 30 years. Dr. Dan is caring, gentle, and takes his time with each patient. He's also a past president of the International Craniopathic Society, a special certification of only 300 chiropractors worldwide. Dr. Dan helps patients from the neck up and the neck down. Dr. Dan accepts most insurance plans. Don't continue to live in pain. Call 813-935-1664 today. That's 813-935-1664 and get on track to better health.
Time after time.
Welcome back to the Half Empty, Half Full Talk radio show. I'm here with Sheila Desautels and with Katrina Madewell, and we're talking about the process of buying a home. And in the last segment, I was talking about financial health and savings. All right, well, Katrina, you come from the mortgage background. What do you think?
Well, we're big advocates, which is a big reason why I host my show too, Lori. As you know, we want to make sure that people, a big part of our mission is that they live within their means. And I think that spins off to the question that you asked. Like, people should be looking at their financial health, their savings. And I think sometimes, especially renters, they might, and they've never purchased a home before, they may wake up and say, wow, it sounds like a good idea to own a home. Or, Sally and David Jones just bought a house and I think I want to do that too. But they don't put a whole lot of forethought in it. Like, no one's explained to them the process. You're going to have these extra things. And, you should probably have a couple of months in reserves and just that there's going to be some costs going into it. I mean, you have upfront costs that aren't even refundable, like right. Your appraisal and your, sometimes they charge credit reports or application fees, home inspections. I mean, you don't get any of that money back.
Right. It's not like buying a car where you go to the lender and they say yes or no, and here's what the payment. No, there's a lot more going into that.
It's similar in some respects, because if you buy the car and the car breaks down, you have to fix it, right? It's not a lease car, which is typically newer.
That's true. That's true. Sheila, anything to add to that?
Absolutely. I mean, when you have a low credit score, it's a symptom. It's a symptom of a behavior that you have. And I always find it amusing on the credit score because the computer will generate what the fix is. And of course, the fix always comes up with make more money. Dang, I wish I thought of that. But you really, like Katrina said, living within your means is so critical.
Nobody ever does that anymore.
Well, and okay, make more money, but really, very wealthy people struggle with their credit. It's not about how much money you make. It's how you manage the money that you have that comes into
That's
the
the
household.
nail on the head, girl.
That's it. And the same thing, and how you manage the credit, and how you can work on your developing good FICO scores by getting by developing good habits, so to speak.
If you don't manage what you have now, you can't expect to get more. I think those are old philosophies, even in the Bible, right? I mean, anywhere you look, it's just common sense.
Exactly. All right. Well, Sheila, I'm going to start with you on this one. I want to talk about how to find a reputable realtor, because in my industry, I know a lot of realtors that are not reputable, and I could tell you some horror stories. Thoughts that come to my mind.
We can probably tell you some of those too.
Well, I'm sure.
Big ones, yeah.
But I mean, I'm thinking
we see the back end.
Referrals might be a good way to go. How do you find them, and how do you check out a realtor?
That's a really loaded question.
Mm-hmm.
I think, first of all, knowing what the role your realtor is going to play. For instance, Michael Phelps doesn't need anybody to teach him to swim. Okay, but does he have a coach? You bet. He has a whole team of coaches. And you better bet that the silver medalists would love to get their hands on that team of coaches that he has. Because the success is a bunch of little things that are strung together, and your realtor is a part of your coaching team. They're not there behind you where you're leading the way, and they're not ahead of you. They're your partner. They're beside you and counseling you and coaching you and giving you direction.
All right, good. Now, Katrina, I want to ask you, coming from the mortgage side of it too, talk to me about pre-qualifying versus qualifying. Yes, you're smiling, and so am I.
Pre-qualifying,
yes, and I'll give Sheila a chance to.
versus being pre-approved, right?
Yes.
So short lender explanation would be pre-qual means we pulled your credit, your score is good. Based on the income you gave me, you're pre-qualified. That's what a pre-qualification is. Pre-approved means this is what you told me. This is what we verified. We've looked at your pay stubs. We've looked at your bank statements. We've looked at your tax returns. Everything you told me matches. The credit score is good. You're pre-approved.
And that's what you really want, is the pre-approval. The qualification just kind of gives you an idea. Is that correct, Sheila?
Well, I take it from a much more lay person, although I have originated loans. But really, the best analogy was from Jerry Seinfeld. And he explained his own loan process as a financial enema. And that was 10 years ago. And he makes plenty of money. So it's not a matter of how much money he makes. So these days, I would have to say that the pre-approval is just the financial enema. And that's the foreplay for the total colonoscopy, which is the loan.
Right. And they're going to dig deeper than ever because of the whole meltdown. So, be prepared. That's another part
That's
of it,
what
too.
I mean, the full-on colonoscopy.
That's it. All right. Well, Katrina, let me go back to you. What expenses does a prospective homeowner need to be prepared for?
Well, definitely you're going to have, a home inspection is not required, but it's highly recommended. And if your agent did not recommend an inspection, I probably would run. Right, Sheila?
Yes.
But you're probably going to spend about $400 to $500 in an inspection, because you're going to have everything from your general inspection to a 4-point, a wind mitigation, termite inspection, and these may be other inspections that insurance or your lender may need if it's a government loan. You're also going to have your appraisal. That could be in the neighborhood of $500. Your escrow deposit, minimum about $1,000. On a lower end property under $100,000, you might be able to get away with $500. But you got to think there's a seller on the other side of the transaction that's taking their home off the market for 30, 45, 60 days. So they want to make sure that you're serious and you're interested in buying. And another expense that I should mention, just because of the timing of the market, we see quite a few bank owns still in the marketplace. And so one of the things that we've seen, and this is actually an issue in some cases, but they're going to pass on doc stamps on the deed, which is typically and customarily a seller paid item. They're going to pass those on to the buyer pretty much on any REO or bank owned property. And the other thing too that we've seen, and I'm sure you've encountered this also, Sheila, even though if you choose on the contract that they're going to pick and pay for title insurance, sometimes the companies that they have affiliations with or relationships with, which are the ones that they're picking, have title insurance that may be significantly higher than if you picked and paid for your own title policy. So that's something that I would ask for a preliminary HUD or a settlement statement in advance. A good agent like myself or Sheila is probably already going to do that for you. That way you don't have any huge surprises a little bit later. And hopefully your lender is doing some of that too.
All right, good. Now, Sheila, I want to ask you, when you go to help a client, how do you help that client if they don't already know what type of a home they want? I call it my wants versus needs. They come to say, I want to buy a property. Maybe they lived in an apartment. So, they're thinking condo, but then, hey, maybe they may change their minds a lot. How do you help them come to, yep, I look at the look on your face, yep. How do you help them or guide them to what will work for them?
Well, I think that when you actually get to the part of the process where you're actually finding the home, for me, and I'm sure the customer too, that's the fun part, the shopping part, the valuation part. But a lot of it has already been done when we talked about going from macro to micro. There are certain things that you are not able to change about your property. And when you keep in mind that your property, the only appreciating asset in the property is the actual land. So you've got to really pay attention to where that land is. Is it in a CDD community? Is it an HOA? Is it what is the taxing district? How much do they charge? Is it in a good school district? Even though you don't have school-age children, that doesn't mean that will not affect the overall resale value of the property. So all these things have to be considered. So you've already done a lot of driving around, and then you have an idea of what you need, whether how many people are in your household, how many bedrooms, how many bathrooms are you going to need. So once you get that all ironed out, the details, once you have a geographic area that you're choosing amongst, you just find the best value within those boundaries.
Okay, good. Now, Katrina, do realtors, what happens, let me put it as if I were the prospective client. I want to purchase a specific property, and let's just say it's hypothetically selling for $200,000. And I say to you, well, Katrina, you're representing me. I want to make an offer on that house. Do you help me determine if that house is fairly priced, and can I come in with a lower offer on that property?
The current market that you're in is probably a better answer to that question. And the market that we're in right now doesn't allow for that. And so, for example, the bank-owned properties, they've already done appraisals on these. They know what they want. So they're going to test it for a certain number of time, whether that's 30 days or 60 days, until they get the number that the market brings. But they already know exactly where they want to bring it. And, we've got a couple clients now that we're working with that keep wanting to make these lowball offers. And we call those our come to Jesus talks. So we're like, look, this is in another market that might be conducive to what you're trying to do. So first of all, you find out who's giving them that advice, because it might be from a parent that bought a property in a different market that's nowhere near like the market we're in now. So I would say the market that we're in now does not warrant lowball offers. You're going to get exhausted in the process before your real estate agent will, because they're going to be looking at properties, whether it's with you or somebody else. So we do this all the time, but and it'll be very taxing for buyers to go through that and get outbid and constantly be looking at properties. They'll get tired.
All right, well, let me turn that back to you, Sheila. So explain what comps are. We hear realtors always talk about comps. What are comps?
Well, a comparable is what you're doing is you're evaluating buyer behavior in your neighborhood. And the only way that you can sales have been in your neighborhood. You want a recent picture of what the recent sales are. So you don't want to go back too far, because let's face it, somebody who made their buying decision in July of last year, if they closed on the house in July of last year, they actually made their buying decision in May or even June of last year. So that's what you're looking at, because all the data is historical. So that is what a comparable is. And I'd like to say that there really is no market for a lowball offer. I think that everyone has been caught up on asking price, and that when you look at a short sale, we see how irrelevant asking price really is, and that what is going to rule the day. Because even if you do, let's say you're a seller and you're able to get some poor soul who hasn't looked at one comparable and made an offer, if he needs a loan, he's not going to get that loan, because guess what? The bank has looked backwards, forwards, and sideways at the market, and they know already what they're willing to lend on that property.
Right. I think a lot of people think they can just walk in and it's like used car sales. They used to make the jokes where if the property's selling for $100,000, I'm going to go walk in and say, I'm going to offer them $50,000, because they don't really understand how the process works to that market, right?
Yeah, we pull comparables or the comps like an appraiser. So we're going to pull within a 1 mile radius of the subject property. We're going to pull within 20% on the square footage. We're going to pull properties that have sold, the USPAP guidelines, which is the guidelines that appraisers follow, allow for a year. But in this market right now, the lenders don't want a year. They're looking very heavily at the last 90 days to 6 months. So, it's conducive to the market you're in. So now we're looking at comps that are 6 months old or less. And, you have to look a little bit at your active and pending too, because sometimes you'll have pending stuff that might be way low, and that might be an indicator on which way the market's headed, or at least in that neighborhood. So,
or no pendings at all.
Right.
That's telling you that
All
there
right.
is no absorption rate.
All right, Katrina, let me start with you this time. So I find a house that I like, and you submit an offer for me. Let's assume that the sale is going to go through. What is the process of what happens once I buy that property? You're going to submit a contract on my behalf to the seller?
Well, you already have done the starting of a contract, which is an offer, meaning Mr. and Mrs. Jones have agreed to buy your property for X amount and close by this day, and just you have all the details outlined in that offer. Once the seller accepts that and signs it, whether you go back and forth or they take it as is, that's when, when they call what they call a meeting of the minds. Once you have a meeting of the minds, that's when you have a binding contract. So once that date is established, that's your effective date of the contract. So once you have your effective date, that determines all the other timelines set within the contract. And so one of the first ones right off the bat is typically going to be your escrow deposit. So usually within 3 days, you need to get that $1,000 or whatever it is into escrow, and it'll be verified that it's there, and it's your money. You get it back at closing. It's a credit, but it's going to be required. One of the next things you'll go through is your inspection. Inspections are, again, third-party services for third parties rendered, and it's non-refundable. So if you don't like the inspection, you can get out, but you have a certain time period to do that. Usually that's within roughly 10 days. And then the next step usually is your lender is going to be going into overdrive, and it might seem like your agent's kind of sitting back, and they are a little bit because they've done a lot of the work already in advance, and now they've kind of passed the ball to your lender that's going to be moving forward. They're still going to be helping do a lot of things behind the scenes.
And I'm going to jump in just for a quick second because we got to run to a commercial break, so hold your thought. Be back in a second.
Do you need a private U.S. address for your home business? Do you need help packing and shipping? Are you tired of keeping your inventory at home? Do you need a storage space to store your merchandise? Helpship.com is a domestic and international shipping and packaging service company that can help you with your shipping needs. No matter where you live, we can forward anything to anywhere for you and your customers. Our services range from packing consolidation service, mail forwarding service, shopping assistant, and much more. We're rated A on Better Business Bureau. Expand your business to the globe with us. Please visit Helpship.com for more information.
Hello, I'm Jim Velasquez. Does getting a lousy 1% on your CDs make you sick to your stomach? Inflation is hovering at 3%, so what's really happening? Allow me, Jim Velasquez, to send you my free report. If you haven't reviewed your CDs in a while, don't get this report. It will break your heart. If you want to fight back and beat the bank, text RETIRE to 72727 for this free report. Let's beat the bank. Text RETIRE to 72727 for your free report.
I've paid my dues time after time. I've done my
Welcome back to the Half Empty, Half Full Talk radio show. We are talking about the process of buying a house. And Katrina, I kind of interrupted you at the end of the last segment, so go for it. Explain the next steps.
So picking up where we left off, just to recap quickly in case you missed it, your question was what happens when you're ready to make an offer and the contract's accepted and now you're ready to move forward, what's next? So typically, and the timelines can vary from one contract to the next, escrow deposit within 3 days, inspections usually within 10. Your appraisal should be done roughly, there's not a timeline associated with this, but normally 15, 20 days max. That's when the listing agent is going to be saying, hey, I haven't seen an appraiser yet, because you have a commitment period built into that contract, which is usually about 30 days, which means they're going to want your lender to give them a written, yes, we intend to give Mr. and Mrs. Jones a loan. And if there's any outstanding contingencies before they will give them a loan. And then from there, it's organizing those last details, making sure your title's clear, doing a final walkthrough, which is important. So many times we see closings or the close of escrow get delayed. And my suggestion is you always want to make sure you do that walkthrough the day of closing or the day before and not later. And if you've already done a walkthrough a week ago and your closing's been delayed, do another walkthrough. Because I'll tell you, we had this happen about a month ago. It was a bank-owned property. It got delayed with the lender. We went back and looked, and some kids had broken in, flushed a lot of papers down the toilet, clogged it up, took skateboards, ran them all over the wood floors, and did some damage to the property.
Gotcha. Okay, a lot to know. Well, Sheila, I'm going to go back to you on this question. Explain, how does the realtor get paid?
Well, the realtor is paid from the seller. The seller has an agreement with the listing agent, and a buyer's agent is usually paid with the agreement that we all have with the multiple listing service, which is a part of our board. And that is the way that we can bring to you all the homes that are listed on the multiple listing service. Even though Katrina Madewell is with Charles Rutenberg Realties, I can still show her properties, even though I'm with Top Notch Associates. We share that information because we want to be able to
Cooperating agents.
will cooperate, and that is good for everybody. That's good for the industry.
All right, now, one more thing I want you to explain, Sheila. Are there different types of realtors? You know, I see specialty certifications that some realtors have. You hear the terms buyer's agent, listing agent, transactional agents. What is that? What does that mean to someone listening to the show?
Well, as far as the state is concerned, buyer's agent has a strict fiduciary duties to their client, and all these fiduciary duties are different with the different terms. There's a transactional broker, which allows an agent to basically look out for the transaction, and that is their customer, if you will. They are to be all fiduciary duties include honesty to the customer and accountability for funds. So that those two things are covered. And then how the transaction takes place after that, most people have a comfort level with the person that they're dealing with, their coach, that they know their personality well enough to know where they stand. At least if you don't, you really should. That would be a part of your process for finding the right realtor, someone who has the kind of philosophy that
You should click.
You should click, but not only that, there's somebody who, you want a balance between someone who's got good street smarts and good book smarts, and then the integrity to follow them through.
Good. I think that's that makes a lot of sense to me. Well, Katrina, let's talk about for sale by owners, otherwise known as FSBOs. Are they a good idea, a bad idea, and what are their risks?
Well, the one thing I would say, and this is like real estate 101, buyer beware. It's not always a bad idea. I wouldn't say that. There's a reason why they're selling for sale by owner, whether that reason is the price is too high and they know it's not going to appraise, whether they are not wanting to fill out a seller's disclosure statement because they're trying to hide something that they know about the property that they know a realtor is going to make them complete and fill out and disclose everything that we know to a potential buyer and their agent. Sometimes they may have just had a bad experience with an agent in the past, and so they think one size fits all. We're all created equally, and we all suck. And if that's the case, sometimes it's just a matter of connecting with that for sale by owner. And most of the time, they're willing to pay what they call a cooperating agent or a buyer's agent comp, which is the 3% that typically a listing agent and a buyer's agent would split. Not always. It can vary from one transaction to the next, but they would cover whatever your expenses would be from the buyer side. Now, if they don't, and you have a buyer agency agreement, the buyer could be on the hook for that. So you'd want to be clear on that with your agent.
All right. Now, Katrina, what's the percentage of a good faith deposit? Is it a percentage? If I'm going to make an offer, is it usually a certain percent? I see 3%, I see 20%. Is it determined by whatever they are qualifying for on that particular mortgage program?
In the past, I would say, doing this for 22 years, at one point they did base it as a percentage of the sales price. As far as in our market here, we don't typically see that. We typically see, your median price homes are around the 175, 180 price mark in the Tampa Bay area. So it's not uncommon for us to see $1,000, $1,500, sometimes $2,000. As you move up in that scale, if you're looking at $250,000, $500,000, $1 million house, they're going to want a lot more skin in the game because, they're taking their house off the market. And the higher you get in that price pool, the smaller number of buyers there are. So they don't want to take away, that exposure to another potential buyer that is qualified and serious when you might not be. That's why those stakes are, they up the ante a little bit on the price.
Gotcha. All right. Now, Sheila, just give me like a simple, short explanation. I know you're making that face at me because I know they're all long and complicated. But to somebody listening to the show, what's a deed, a mortgage, a loan, and a note? And that's probably tough. But if a deed is,
Well, the county gives you a deed of ownership for your real estate. And then a mortgage is actually, you're giving that deed back to your lender. And then a note is what you've agreed to pay for that real estate. So you're actually giving the deed back to the lender on certain conditions, which primarily goes, you pay, you stay. You don't pay, you don't stay.
gotcha.
We're, not to correct you, but we're a lien theory state.
Yes.
Some states are title theory, which means you technically don't get the deed until the end, but Florida is a lien theory state. So you always have the deed all the way up until they actually foreclose. It is your home. You're not giving it back to the bank at any point, which is why our judicial process is so long. The mortgage is the security instrument or the collateral on the property that allows the bank to foreclose. As Sheila said, if you pay, you stay. If you don't, you won't. That allows them to, they're giving you $100,000, $150,000, $200,000. They want their money back. And if you don't give it back, they need to resecure their interest and sell it so they can get their money back.
All right, understood. Now, Sheila, you came from the military background, right? So how does military service change investment strategy?
Well, definitely you don't have an opportunity to decide where you go and how long you're going to stay. So that really is going to change a lot of things. It's different when your family is being posted across the country. You can't just say, well, we'll hang on to the house here. You know, you want to be able to offer another property in your new location, and VA only covers one house at a time. So that means that if you've used your VA for the purchase of your current residence, you have to sell that residence no matter what the real estate climate is in order for you to get another property. So that's going to change things a little bit.
Okay. Now, Katrina, do service members receive, I call them special deals, but when it comes to mortgages, the VA, what is different about that than, say, somebody who was not a veteran?
Well, the VA is going to have non-allowables, which are things they do not want the veteran to pay. So, for example, termite inspection is something they consider non-allowable. They don't want the veteran to pay that for whatever reason. You know, $50, $75, they don't want them to pay it. They also have certain standards that they expect the home to be in. And so they want to make sure that, you know, those standards are in place so that it's a good, secure home for the veteran. You know, they're theoretically speaking, they're always looking for the best interest of the veterans. They want to make sure that home is sound. And really, I would say just the non-allowables is the biggest thing. There's a couple non-allowables they don't allow the veteran to pay.
Okay, so if you were in the military, are all military loans provided by the VA only?
Well, they're not actually provided by the VA. The VA guarantees the loan. And what you were saying earlier is sort of true, but not exactly. The VA gives an amount of entitlement, right, for the VA.
Yes, that's right.
And
that's
so if you
technical.
have enough entitlement left, you can buy another property, but most of the time you don't. So what you said was sort of correct.
In theory, the eligibility, that's right. Well, but the thing is, the goal of the VA program was for principal family residence. They never designed it for investment property.
And
that's why it is primarily one residence at a time. So, and
if you move, don't forget that your entitlement's still tacked onto that property if you let somebody assume, and I wouldn't recommend it.
Wow, a lot of stuff going on here. Okay. Now, what happens when the service members have to relocate, like your family did? You know, if they haven't, what happens when they haven't sold the property they live in and now they're relocated and now they have to rent somewhere until they sell that and they can buy another property once they're free, so to speak?
well, what our family did was we just buckled under and sold whatever the conditions were in the market that we sold or that we bought in. And if it had not done well, then we didn't do well. We didn't have the option of saying, well, we'll hold on to it for another year and see what happens with the market. We just didn't have that flexibility. We had to go with whatever was available.
A lot more discipline, I think, at that time than some of the VA buyers that we see now.
Yes. Well, I think generally speaking, I think that we're much more gratuitous generation.
All right, now I'm going to go back just a little bit. I want to talk about one more thing. In the define for me, I'll have Katrina do this, the debt to income ratio. In other words, how do I know if I can afford a home?
The generic standards are 28% housing, 36 back end or total ratio. And the way they get that number is you take your mortgage payment. Let's say it's $1,000 a month, right? For good, simple, even numbers. Mm-hmm. They would want your gross monthly income before taxes to be about $2,800.
Okay, so when I'm a prospective client, I come in to talk to you guys and say, okay, I want to spend, I want to buy a $200,000 house. You're going to say, well, wait a minute. Are you guys, before I get to the mortgage person, kind of pre-qualifying me, using those words to say, hey, in other words, how do you know? You want them pre-qualified first, right?
I mean,
through a mortgage
technically,
person?
the realtor really shouldn't be doing that unless they're licensed to do it. I kind of do it by default just because I was bred that way, but I don't technically do the loan and I don't give them any mortgage advice, but I can run numbers to say if they're in order or not, and then connect them to the lender, and they'll go over debt ratio.
Right. Okay. Anything to add to that?
And the thing is that sometimes people understand what you're asking them, and sometimes they don't. So sometimes it's really just a matter of seeing the documentation, and that's something that your lender will do. And I think that is very valuable, that they can actually see your pay stubs. They can see what you have in reserves, what you can use, what they would recommend that you would use, that type of thing.
But if you have 50% in expenses, and it's 50% of what your gross monthly income is, you're probably not going to, your debt ratio is probably going to be too high.
Gotcha.
If that's an easy answer for you.
That's a pretty easy answer. We come back, we're going to talk about what if things go wrong, so stay with us.
Otherwise, his Sunday best. Mother's tired, she needs a rest. The kids are playing up downstairs. Sister's sighing in her sleep. Brother's got a date to keep, he can't hang around. Our house in the middle of our street. Our house in the middle of our house, it has a crowd.
Do you suffer from back, neck, or body pain? Do you suffer from migraines or have jaw or face pain? Has conventional medicine failed you? Were you injured or in an accident? Call chiropractic physician Dr. Dan Maddock at 813-935-1664. Dr. Dan has helped thousands of patients gain relief for more than 30 years. Dr. Dan is caring, gentle, and takes his time with each patient. He's also a past president of the International Craniopathic Society, a special certification of only 300 chiropractors worldwide. Dr. Dan helps patients from the neck up and the neck down. Dr. Dan accepts most insurance plans. Don't continue to live in pain. Call 813-935-1664 today. That's 813-935-1664 and get on track to better health.
Do you need a private U.S. address for your home business? Do you need help packing and shipping? Are you tired of keeping your inventory at home? Do you need a storage space to store your merchandise? Helpship.com is a domestic and international shipping and packaging service company that can help you with your shipping needs. No matter where you live, we can forward anything to anywhere for you and your customers. Our services range from packing consolidation service, mail forwarding service, shopping assistant, and much more. We're rated A on Better Business Bureau. Expand your business to the globe with us. Please visit Helpship.com for more information. Do you need a private U.S. address for your home business? Do you need help packing and shipping? Are you tired of keeping your inventory at home? Do you need a storage space to store your merchandise? Helpship.com is a domestic and international shipping and packaging service company that can help you with your shipping needs. No matter where you live, we can forward anything to anywhere for you and your customers. Our services range from packing consolidation service, mail forwarding service, shopping assistant, and much more. We're rated A on Better Business Bureau. Expand your business to the globe with us. Please visit Helpship.com for more information.
Consumers, do you have bad credit? Can't purchase a house or car? Paying too much in interest on your credit cards and loans? Scammed by credit repair companies? There is hope. You can get back on track and do it the right way. Call Credit Education Consultants today at 813-500-6064. That's 813-500-6064. Or go to crediteducationconsultants.com now and get the help you need. Don't delay. Call today. Mortgage reps and realtor inquiries are also welcomed.
I've paid my dues time after time.
And welcome back to the Half Empty, Half Full Talk radio show. And we are talking about the process of buying a house. What I want to discuss in this last segment is about due diligence. We talked a little bit about how to find a realtor, how to find, we could talk about how to find a mortgage rep that are reputable. Now, the ways that I think of doing it might be different than yours, so if you have suggestions, but I will check people out if they're licensed on myfloridalicense.gov, which will, I believe, tell you also if they've been disciplined. I've Googled people. I look at, the referrals, for example. If there's an attorney, I can go to avo.com, and I check to see what's written. And, if you see a lot of bad things about somebody, that usually says something. But if you see mostly good and you see a couple bad, well, I think that's going to happen, with anybody. But tell me about due diligence. How do you do it?
As far as finding a good agent?
Finding a good agent or anything.
I'd say ask for referrals and recommendations first, because if your friends had a good experience or a coworker or a neighbor, chances are you probably will too. And you could look online. There's a lot of resources. Like you said, Google someone. Google their name, see what comes up, see what type of reviews are out there. You could certainly look on Angie's List. Sometimes there's reviews there. There's a lot of different places, but I would say Google will give you a lot of information. And, the state probably isn't a very good resource, Lori, that you mentioned earlier, just because it has to get to that place to even get a complaint. So, you probably could look there, and if there was a complaint, I would definitely beware. But for the most part, I would say Google and ask for recommendations and look around.
Okay, anything to add to that?
Well, I think when you Google, you should understand that anybody can put anything on the internet. I've had some disgruntled tenants who didn't pay their rent, seem to think that was my problem and that I was, the criminal in that situation. So you have to really know that on the internet, anybody can put anything on the internet.
Well, ask for recommendations. You should be able to give, a good agent should be able to give you a couple people to work with right now and people that just closed escrow that could give you a recommendation.
Absolutely, yes.
All right, good. Well, now, what about, Sheila, what about home warranties? Are they good or bad, and how do they work, and who gets one?
I would say that a home warranty is generally a good idea. It's an insurance for things that go wrong. And if you're someone that is new to the area and you don't have an inventory of people that you can call for certain things, home warranty is a good thing to have, because that's one phone call away, and then they'll set up a reputable vendor and have the guy come in. Yes, there's a trip charge, but you're going through, you have someone, again, this is a part of your team. This is part of your coaching team where you have someone you can talk to about the repair. Maybe you could get somebody else. Again, they have an inventory of people that they can call, vendors that will come to your home that they've already investigated, and they're probably good ones too. So,
well, let's talk about the pitfalls. Let's talk about the warnings, and what if things go wrong? And Katrina, I'll start with you. Excuse me. What happens if you get a situation where either the seller or the buyer won't cooperate in some sense of the word? You guys are laughing. I'm sure it's not uncommon, right?
There's a provision in the contract that allows for mediation and arbitration. It says that the seller is supposed to, like, in short, right, taken away from the legal jargon, it says the seller is supposed to do what the seller has agreed to do, which means allow access for showings, vacate on time, all that stuff. The buyer has agreed to do what the buyer has said on the contract they're going to do, and that's get their home inspections, cooperate with the loan process, be ready, deliver documents on time, show up for closing, bring your money, all that kind of stuff that one would think makes sense. But those are definitely all parts of the things, and if they don't do that, then technically either party could sue the other for failure to perform, but before that could happen, they would have to go through third-party mediation and arbitration. If that didn't resolve it, then the party that won basically would get prevailing fees and costs, which means if I sued you, Lori, and I'm a seller and you're the buyer because you didn't perform or you didn't show up or you changed your mind, and I already loaded up a moving truck and moved out of state or whatever, I could sue you for failure to perform or try to take your escrow deposit or whatever. And basically, if we didn't work it out in mediation, it got through litigation, and the judge decided that I was right and you were wrong, you would have to pay my attorney's fees and costs.
Gotcha. All right. Now, Sheila, next question is for you, because I've seen this happen lots of times. The credit's pulled the day of closing, and now there's a problem. The client thought they were safe, and they went out and spent $10,000 on furniture, or they bought a new car the day of or the day before, or day before closing. Uh-oh, what happens?
Unfortunately, their loan is declined more often than not, and their whole transaction falls apart, and they are liable. That was their action.
I mean, they need to qualify for that payment. Sometimes they can qualify for it, but I tell people, do not go buy a car for a garage you don't have yet. Don't buy furniture for a home you don't own yet. I mean, it's just common sense. Until you own it and it's done and the title company says, here's your keys, we're dispersing the file, then you can go buy furniture or do whatever you want to do. But don't do it before that. And don't tell your boss off and quit either, because they're going to verify employment the day of settlement.
All right, got it. What about, we were talking about final walkthrough problems. Katrina, have you had that happen? You mentioned the one story.
Well, we've had sellers that don't want to vacate. We had this story about 2 weeks ago. And I had a client that one of our buyer's agents was working on it, and she had a really hard time with the seller vacating on time, and they were closing escrow. This was actually on New Year's Eve. So everybody was trying to leave early. We were at the title company till late. Long story short, we went to the property to do another walkthrough. And this was like, we gave them way more time. We were actually 30 minutes late getting there, and then we were going straight to settlement. And the seller still wasn't vacated. They were still moving stuff out of the property with a moving truck in front. They had all this junk in the back, all this stuff in the garage, and in the sheds outside. They had a car on the property with no tag, didn't even know if it ran. So long and the short of it was, I had to explain to the buyer, look, if they change their mind and decide they don't want to get this stuff off, and then you move the car, they can try to sue you. I mean, there's so many what ifs. Like, you ask any attorney about post occupancy by the seller or pre occupancy by the buyer, and they're all going to say no, 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 because it's, there's never a problem until something goes wrong, and that's when the attorneys come in.
All right, wow. Sheila, you got a quick crazy story to tell me?
Oh my goodness. There are many, many stories that I can tell you. Many, many like the one that Katrina just described, where a lot of the times the seller will not be out and you're standing there thinking, what are we going to do? And possession is 9/10 of the law. So, if they're out, that's when you can go forward. But sometimes you've got the moving truck bearing down on you. Many times the movers will hold your items, but they'll charge you for that. So it'll be an additional cost. You might want to negotiate.
I was going to say, if the people are still on the property and you're moving in, can you charge them back for staying in that property? Because now they're in your property.
I wouldn't close, actually. I would not recommend to close, and I personally wouldn't close. I would just say to them, when you have a vacant home, and then you may need to find, you will need to find an alternative. I always say to somebody, you should really even have a plan B. Because then you know that you have something to fall back on, and then the whole process is a whole lot less stressful.
What happened with that same story that I was telling you earlier where the seller wasn't vacated? I said, look, the buyer's here to sign and do their part, which was, again, their obligation on the contract. I said, your part's going to take about 5 minutes. So my suggestion would be that you go back to the property, get it completely empty, let the buyer sign, and we'll go back and do another walkthrough. As soon as it's done, the title agent can disperse funds. And I got to tell you, when we came back there, and then the buyer really got it at this point, but they literally had pulled people from the grocery store. I think it was just people walking by. I mean, that were literally unloading all this stuff on the shed, and the buyer goes, I can't, like, he asked the people, do you know the seller? And they're like, no, we were going to Home Depot or we were going to the grocery store. And they're okay. And I said, so now do you see what I mean? If one of these people falls and breaks their neck, guess whose house this is?
Yes,
and now you see what I'm saying.
Wow. Well, thank you guys for sharing these crazy stories. Sheila, how do people get a hold of you? What's your phone number if somebody wants to get a hold of you?
Actually, the best way to get a hold of me is to email me. It's very simple. It's tampabay@tampabay.rr.com. Or if you want to call me, you can call me at 813-855-2800.
Okay, Katrina, how can people get a hold of you?
Probably just go to tampahometalk.com. You can reach out to Lori, or you could text or call me at 813-777-1196.
Great. And Katrina, tell us, what days and times is your show on?
You can catch me every Thursday and Saturday at 5 p.m.
Very good. Thank you both very much. I think you gave a great explanation of the process. Very interesting. And thanks to everybody out there listening. Join us every week for a new half empty, half full Consumer Advocacy Talk radio show. Learn something new every week and get smarter faster. Be safe.